which have been doing well over the last month or so have been these brief makers. We have Dollar Industries reported a weakest set of first quarter numbers, but there were, some sort of green shoots coming by as well. Cross margin improvement is something that the street likes. As stock higher today, Vinod Kumar Gupta, who's the MD, joins in now. Thanks a lot, Mr. Gupta, for joining in. On your business going forward, just wanted to know what kind of volume/value growth are you penciling in for this year? Because the first quarter, even though there was a volume growth of 4%, there was a value decline of 12%. When do you see that returning?
For this current year, we are envisaging a growth rate of 10 to 15% in terms of volume. And the prices have come down after the fall in the prices of raw material. Because of that, only in the first quarter, you can see a value decline by 12%, but then there is a volume growth of 4%. And we understand that now the prices of the basic raw materials, that is cotton and the cotton yarn, these have got stabilized, and we look forward to a great future now.
Okay. Mr. Gupta, is all of your high-cost inventory cleared now? And what is your margin outlook?
Yeah, the margin outlook for this first quarter, we have ended up with a margin of 32%. And we continue to maintain this or even better than this. And the prices of raw material have been bottomed out. So the high value inventory is also not there now, because it's been more than 6 months that the prices of the cotton yarn have been on a stagnant mode, maybe 5-7% here or there. So the high value inventories are already been now vanished from the system, and now we look ahead a great future.
Okay, Mr. Gupta, all the best for that. But your premium segment has done quite well. It's been a volume growth of almost 50% that you've seen in your premium segment. Is this something that can continue, and how much can it eventually contribute as the premium segment as an overall part of your business, say by the end of FY24 and 25?
Yeah, the premium segment is doing very well. The Big Boss brand, which we have under the premium segments category, it's been really doing very good, where the Akshay Kumar is already our brand ambassador. And we have renewed him also effective 1st of April 2023 for further 3 years. So we understand that since the prices of cotton and cotton yarn have already been down, there will be a good demand for Big Boss kind of range, or that means the premium range in the future time.
All right. Let's talk about two other growth drivers for you. One is the women's category. That's sub 10% of your overall sales right now. Where do you see this going? And second is athleisure. I remember the last time you joined us, you said that, you are expecting 40 to 50% growth coming by in your athleisure segment. And this is also something which has margins which are higher than the average segment. So for both women's wear and athleisure, what's the kind of growth and contribution you expect?
Yeah, for the women's segment, we understand that the demand for the women's range of our products has really been good in the market. And very recently, we have also added brazier into this. So we understand that in this current financial year only, we are looking for 12 to 13% of the total business coming out of this women's segment. And women's segment, the demand has really been good in the market. And we continue to steer the growth into this. And for the athleisure is also a high-value segment where we are doing a very good business, around 40 to 50% growth every year. And we understand that since the demand for the athleisure segment of our products is really good, and we have also come out with a special active wear also into this athleisure range. So we continue to see the growth at the same space in the near future.
Okay. You did speak about some brand ambassadors for your products, Mr. Gupta. What does that mean in terms of advertising costs? Because that jumped up significantly in FY23 as compared to the previous fiscal. So what is it in terms of a percentage of revenue, and what are you guiding for in terms of, say, an exit run rate when it comes to advertising costs as a whole, as well as a percentage of sales?
Yeah, the advertising expenses last year, of course, it was very high. It was more than 100 crores. which is almost more than 8% of the total revenue. But now for this year, we are trying to keep this around 6% of the total revenue. And in absolute terms, we are targeting not more than 75 crores in this financial year.
Okay. You said athleisure is also doing quite well and the premium segment is doing well. Would this eventually mean that at some point I mean, of course, you had done double-digit margins last year as well. But given that these, high-value premium segments are doing well, the margins, do you think it's sustainable at about 10% plus for FY24, FY25? And are there any more margin levers that you can eke out in the year to come?
Yeah, for this current financial year, we are targeting an EBITDA level of 11 to 12%, maybe around 11% only. And for this, since our high-value inventory has also been or has already been wiped out, so we understand that with this level of advertisement expenditure of not more than 6% of the total revenue, we understand that we should come into double-digit EBITDA margin, which we have targeted for this current financial year.
Right, and finally, before we let you go, the one part of your business where you are investing is increasing your dealership network. You had targeted about 300 dealers by the end of this year. Where do they stand at right now? And do you, look to invest in some capex as well, given the sort of growth opportunities that you're seeing?
Yeah, for this current financial year, we have already targeted a capex of around 30 crores in terms of 6 megawatt solar power we are going to additionally have for this current financial year. That is the only capex we have targeted for this current financial year. And in terms of what was the other question, sir?
Your dealer network.
Yeah, dealers network. We are right now having more than 1,500 dealers network all across the country. And for this current year, we have targeted to have 300 more. Out of those 300 more, we have already we have already appointed around 100 dealers additionally in this current financial year. And we hope to reach out to this number of 300 additional dealers network in this current financial year.
Okay, all right, Mr. Gupta, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Dollar Industries. The stock is up around 6%. The company is quite confident in terms of volume growth going into FY24, and they are estimating that eventually they will see double-digit margins as well. We need to take a short break with the news.